Hey everyone, it's Ed Kine from over at Quantcha, and welcome back to a special edition of the Quantcha Challenge. In this episode, we're going to take a look back at our performance in January 2019 and take a quick review of some of the things we did and how things turned out versus how we planned them to work. So, we're going to start off with some slide work here. As always, we recommend you check out Quantcha Unlimited, which is our commission-free stock and option trading plan that includes everything in our web tools as well as that commission-free trading for $99 a month. It's really, really worth it if you do any kind of trading at volume. So, without further ado, let's take a quick review of what the Quantcha Challenge's goals were. We kicked it off in the middle of January, on January 9th, and the goal primarily was to illustrate practical usage of Quantcha. We decided that we were going to go out and maybe take a few risks or open a few trades that we didn't necessarily have a complete faith in the underlying thesis in order to illustrate points and use features along with the platform. Of course, we didn't want to be crazy about it. We did want to manage our risk through sizing and, of course, have appropriate hedging and consider beta when we were placing trades to hedge off other trades and try to keep ourselves relatively market neutral. We also wanted to provide a framework to produce consistent growth over the long term. We really weren't trying to hit home runs every day. Instead, we just wanted to be able to put something in place where when you had a strong position on a stock and you felt something about it, you could place trades and have growth over time rather than a lot of volatility in the portfolio. We also made it a goal to employ a variety of strategies and techniques for trading and to illustrate how you can do that with our tools. Our tools are incredibly versatile, and one thing they enable you to do is to model any feasible option strategy, and even the infeasible ones, but to model the strategies and give you the best possible outlook that we can give you based on the probability and the statistics and the pricing and everything else that's gone into years of investment in our platform. And finally, and this is an underrated thing, is we wanted to minimize the amount of time that we spent trading. And while we have some videos that get upwards of 30 or 40 minutes over the past 3.5 weeks, you'll notice that the trading is a minimal part of it. Most of the content in those videos is explaining concepts, is explaining how to use tools, is illustrating examples of different ways you can do the same kinds of things or ways you can get into or analyze certain scenarios. So that's our campaign review. That's what the show is about. But for January 2019, we had a specific set of goals for our portfolio. The first thing was we wanted to establish what was basically a long short book where we have an relatively evenly weighted trades on both sides, and then we would have some volatility trades and some other things that were taking advantage of certain market conditions we saw. But the point was we didn't want to go in there and just say, we're going to be completely bullish, we're going to be completely bearish, or whatever. We're trying to follow the market and be flexible. And we did end up adding several earnings trades because it was earnings season. There was a lot of opportunities that our proprietary data and our tools uncovered that we took advantage of, and we had great success with them. In fact, we actually were pretty bad. I personally was pretty bad at picking directional trades, so I'm glad those earnings trades came through because we needed them. We also, as part of our 2019 goals for January, we wanted to hedge out market risk. There had been a lot of volatility in the leading months, and we knew that there was very possible that we could see up and down days, back and forth, and just a lot of movement and a lot of unpredictability. However, the market volatility really wasn't a major factor as the market was up 13 out of the 17 days we traded. So it wasn't really something that our hedges ultimately went unused largely, and a lot of our trades that were bearish trades meant to hedge the overall portfolio came out with some significant losses. But that's kind of what they're there for. In the end, we wanted to have a portfolio with low change volatility, and our goal was pretty modest. We wanted to grow 1% by the end of the month. And as an options investor, if we can turn around and consistently return 1% or more every month, then I would consider that to be pretty successful. So I'm going to switch over real quick just to take a look at at what our trade looked like for the month. Now this is the performance review for since the beginning of January here, and as you'll see, we traded across 11 different stocks. We used 9 different strategies, including custom and day trading strategies that don't really fit into any predefined. Most of our trades were winners, and our mean return was positive, which is good. And we can break it down which stocks we were successful trading against, which strategies we were successful using, the size and the return expectations when we won across underlying, across strategy, and the same for our losing trades. And then when we find stuff we're interested in, we can drill in and see specifically how did we trade it, how did it move. And another important thing to point out is because we don't pay per trade or per contract commissions, we're able to leg in and leg out of a lot of trades that might otherwise be unreasonable. For example, in the last 24 hours, we legged in to Semantic. We traded 4 legs to enter it. We had 4 separate closing legs, and we actually had a couple rolls in there as well that are brought out separately. So 9 different trades here, but we were able to return a pretty good return across these two trades. Now, stepping back into the analysis of how things went this month, let's take a look at some of the statistics because this is really the stuff we wanted to get to with the Quantcha Challenge in order to make the economic argument to people who are out there. Now, if you've taken a look at our tools and you're not impressed with them, then that's fine. Then you can you can walk away. We're not going to be offended. We get it that people expect certain things and our tools work a certain way, and we have a lot of flexibility and a lot of capability. But if the tools aren't enough to win you over, let's talk about the economics. So, trade statistics, we placed 50 trades over 17 trading days. Now, it was actually more than 50. I just didn't spend the time to zero in on it. We don't have the data that shows all the precise specific trades. I know it was well north of 50, but I'm going to round down to 50 because we're going to do some economic analysis later, and that's going to give some of the other brokers a fighting chance when it comes to analyzing the costs. So we'll just say 50 trades. We'll round it down. It's probably closer to 70 or 80, but whatever. We traded 657 contracts. For example, the Semantic trade alone had hundreds of contracts because we had 69 long and short puts, and then we had 40 long and short calls. So right there, you're talking 214 contracts, and that was just to open, and then we rolled some of them, we closed some of them. There's just a ton of trades on that specific one, and that was a very profitable trade for us. We more than doubled our money overnight in that trade on what was not a super high risk scenario. We also had 1 assignment and 1 exercise. We had a spread, it was deep in the money. We determined that it was cheaper to let it exercise and assign and cancel each other out and just take the loss. That was one thing. Now, important thing, we talked about wanting to be smart with the volatility of the portfolio and to trade it conservatively and trade it well hedged. And even though the market was moving primarily upward, we took some losses, but we never dropped below a 1% total portfolio loss at the end of the day. We were always above that mark. And maybe that doesn't mean a lot to some investors who are used to being very, very conservative, but we traded pretty much exclusively options. With the exception of a covered call trade, everything else was spreads. We had calendar trades. We had some pretty exotic custom trades. We had all kinds of stuff going on. We never dropped below a 1% portfolio loss, even though we had multiple trades completely go to zero on us. And that's just good balance, good discipline, and good tools to help you figure out the way to go. We started a little over $26,000, and in the end, taking away any fees we paid, we were at $26,883, which is a gross gain of almost $860. So before any transaction costs, we were up 3.3%. If you just take the gross gain and then compare that with what we started at. That's pretty good for 3.5 weeks. In fact, if we could return 1% a week every week, it would be just amazing. But for now, we're just happy that we're up. We wanted to be up over 1%, and we did that comfortably. Now let's talk about the trading costs, because we're now going to pull the trading costs out to look at what it would be like. Now, a lot of people are at brokers that have the model of $6.95 a trade and then 75 cents a contract. The assignment fees range, but $19.99 seems to be a pretty popular number. For what we traded, 50 trades, 657 contracts, 2 assignments and exercises, it would have cost $880.23. And again, I'm being conservative here with that 50 trades number. I think we traded, I know we traded more than 50 times. We had more than 50 trade tickets go through, including partial fills that we canceled and then continued with to fill out the rest with another new order. If we had that model, we would have lost money. We would have had a net negative return on what was a gross return of over 3%, because that's how much leakage happens when you pay per trade and per contract commissions. It really, really digs into you. Now, some people are using other major brokers who have slightly less aggressive commission structures. In this case, let's say $4.95 a trade, 65 cents a contract, $5 assignments. Well, in that case, good news, you're positive. Of the 3.3% that was the gross return, you kept, I don't know, a quarter of it. So that 0.67% return, well, that's $175 that you wouldn't have had otherwise on a $26,000 portfolio. But that leakage really, really does hurt. And it almost makes it to the point where with these two models, and by the way, these two commission structures represent probably north of 90% of all the accounts that are trading in the U.S. retail market. Maybe I'm being a little high in there, but it's at least 75%. I wouldn't be surprised if it's 90%. So if you're one of the people who's trading like this, just be aware there's a lot of alternatives out there. And one of them is Quantcha Unlimited. With Quantcha Unlimited, you pay nothing per trade, you pay nothing per contract. There's a $9 assign and exercise fee, which we had two of here. You pay $99 a month flat. In this case, that covered all the commissions and everything else, as well as a full license to the Quantcha web tools. And if you are at all interested in seeing how our web tools work and you haven't checked out the Quantcha Challenge, we do virtually all the trading live. We do all the analysis live. Some of the trading is boring because we're legging in and out. So we got to the point where we stopped showing that. But you can still see the numbers. We always talk about how we fill trades after. It's just straight up, some of it's hard work to try to, pinch pennies when you're dealing with bad liquidity. But the net here was we kept $742 out of our $859 profit. So yeah, there was some leakage there, but would you rather pay $880, $680, or $117? In this case, the numbers kind of back it up. If you trade really low volumes of trades and contracts, then maybe the other offers will not hurt you so much. But if you're trading at scale, you're trading the number of trades that we do, the number of contracts we do, the sophisticated trades we do, you need tools that can support you in doing it. You need things that will track your portfolio, your performance, help you hedge your book, help you find and optimize directional trades and volatility trades, charts. You need tools for option search. You need option chain into your book, all this kind of stuff. You can check out all the videos we have. It's all available on YouTube. Our docs are out there, and we're super responsive when it comes to support requests or questions for feedback, any of that stuff. Now, how do you get it? It's really, really easy. You open and fund a Trader brokerage account, and you put Quantcha Unlimited down as the offer that you want. This is literally like opening any brokerage account. Once it's open, you can fund it, you can transfer other brokerage accounts into it, you can do whatever you need to do to get it set up. It's really straightforward. They partner with Apex Clearing. These are both, it's FINRA, SIPC supported or certified. They're members of those organizations. It is real, legit, big league clearing, brokerage, and so on. You also can go to Quantcha and register a free account. You just sign up. We're pretty low maintenance on what we request of you. We need a working email address so we can get in touch with you, and then you can pick some settings about communication preferences. If you want our newsletters, if you want our welcome emails with all the tips and all the details and tips on how to use our proprietary data, our really cool functionality, you can do it. But you don't have to. You just got to give us the email address that works so we can communicate with you, and we can use that to link with your Trader account. Once you have both these set up, you get a link to go to, you click, you sign into your Trader account, it brings you back to your Quantcha account where you're signed in already, and at that point you now get all the data. You get your portfolio within Quantcha, you get real-time data, you get all the breadth of functionality that we support, and you get all of that for just $99 a month. Commission-free trading included. It's an amazing experience. If you have any questions about this, if there's anything else you're not sure of, check out Quantcha.com. Or you can email us, hello@quantcha.com. You can leave questions out on Reddit or any other forums we follow. You can also leave comments down here on the YouTube videos. It doesn't really matter. You can reach out to me directly. I'm ed@quantcha.com. I get back to you as fast as I can. Our whole team here is working to build better option tools to enable you to bring your trading to the next level. Any questions, any concerns, any details, let us know. And until then, please subscribe to the channel, turn on notifications so you can be aware of when we do the Quantcha Challenge. Generally, we start and we go for about 20 to 30 minutes each trading day between 2 and 3 p.m. Eastern. We detail all the trades we want to do. We give a little bit of explanation for why we're doing them, and then we show you how we set them up and analyze them. And then, depending on the complexity, we might actually go through and follow through the ticket. Otherwise, you don't have to stick around for that. So, again, any questions? hello@quantcha.com or leave us a comment below. I hope everybody out there is having great success trading. Why not keep more of those profits for yourself? Check out Quantcha Unlimited today. And as always, good luck and good hunting.